Ladies and gentlemen, welcome to Only Trade to Win. Today we have a really exciting show because we're going to look at all the fundamental numbers that are behind the technical rallies. Today is January 30th, 2024. 4 a.m. New York time. Hard to believe we have only one day left in January. Please excuse the nasally voice. I have a little cold, but what we found out last time is too important to put away for another day. So what we did over the last two shows is first we introduced the Semiconductor Index, and then we pulled up top 7 stocks from the Philadelphia Semiconductor. Here we have column number 2. We have January 1st, 2023, and the date when I took the closing values for the stock are in column number 3, and the number 4 we got the annual change. Then down below where you see A1, A2, A3, these are the alternatives that we looked at. And out of the 3, the A1 SMH performed best. I think we looked over the past 7 years. Now we also updated our spreadsheet for the end of last year, and the Philadelphia Semiconductor Index was up 70%, way outperforming Nasdaq, S&P, Russell, Dow, all of them. And this is what we expect to see, first of all, with the ETFs, and more importantly, with the individual stocks. Because if you think about that, by looking at the numbers, you can see that exponential returns can be achieved by selecting individual investments. Now, people say, I don't know what to do, I don't know how to find them, so just let me have something like a mutual fund or an electronically traded fund. Would be for people that are next level from mutual fund investors because they did the research and they realized that most mutual fund managers charge pretty much for nothing, or something that you can get a lot cheaper by buying an electronically traded fund. But the big money is definitely in stocks, and we talked about Nvidia and followed it from day one I started the show. This was number 1 stock the whole last year, and it remained number 1 stock. It is number 1 stock today. Here are the numbers that we put together on our show on January 19th, and we can say that in the first 2 weeks of trading, Nvidia was up already 19%. So if we look back on our watch list that I updated, this is from the show on January 19th, we could see that Nvidia was up almost 19% in the first 2 weeks of trading. And it tells you that the leaders from last year, like it was right here, 2023 number 1 with 234%, is just going to keep on going until something else happens. And by the way, this 830 number is also from previous show. What we did was we multiplied the stock price that it was a year ago, and then we looked at the earnings and we multiplied the stock price by the amount the earnings went up, and it came out to be that Nvidia, if the price catches its valuations, it should be an $800 stock. And after trading for 132 days in a range that the upper limit was 500, after 1, 2, 3, 4, 5th try, it went from 480 to over 600 in 21 days. And that's how it works. A strong stock moves up, then it consolidates, and then it moves up again. And this is what happens every time. A stock moves up, then it consolidates, and then it breaks out and moves up again. And when people say that, oh man, I missed this move, how can you miss this move? The only way you could miss this move if you were not watching. But if you had a watch list and you were following this stock all the way, you knew what it did last month, last year, last quarter, there is just absolutely no way that you could miss this, because anybody looking at this chart can tell that this is an uptrend. There was a big move up, consolidation for an extended period of time, and after that consolidation, there was another big, powerful, explosive move up. And if you were with us doing the work and looking at not only stocks, but also indexes, you could clearly see that they were moving up, all of them. Here's column number 5. December, all of them were moving up. November, all of them were moving up. The stocks were doing phenomenally well. So the only thing you had to do is just basically find that perfect pullback to get in and stay with it. And if we're specifically talking about Nvidia gave us more chances than any other stock to come in. Here's the first touch for 500. Boom. Here's your 18% pullback. After that, we have another nice bounce. We don't make highs, don't even come close to them. Let me just take this one and bring it down and say, okay, so we had a pullback that was about 20%. Here's your one chance. It runs away. You didn't get it. Here's your second chance. When it came to the end of the year, right here, see November 20th, 22nd, we said, okay, we're waiting for one more pullback. I don't think it would be as large as the ones before, but we are looking at another pullback. And I think the number we said was, can get 10%, that would be great. And look at this. One of the things that we did talk about was that when the stock will break out, it will have an explosive move up, and we never know how far it's going to go. But because all the fund managers that are judged by the performance of their funds plus the investments that they're holding were not back in Nvidia, they did not have that stock, and this was buying into something that every fund manager must have in his portfolio, in her portfolio, when this 2024 ends. Now, the interesting thing is that there are a lot of fund managers that are not in this thing, and they're waiting for Nvidia to pull back. So for 2 months, we had the conversation and we were saying, we are looking for an opportunity to get in for the next move up. Aggressive traders who are getting in here have to be ready to sit through a 20% pullback before we make that new high. Those are reasonable expectations because this is what Nvidia does. It makes a high, I'm right here on the left. It makes a high, pulls back 16%. It makes another high, pulls back 18%. Has a nice rally, pulls back 18%. And here we go. So the reasonable expectation is that I'm expecting that this stock is going to break out because it has phenomenal earnings. This company is doing really, really well. And we'll look at it in just one second. But I need a strategy to get in, and this is what people are looking for. I say, look at the picture. Do you see the pullbacks? Yes. Now pick a strategy. Say I'm going to be a breakout trader because I cannot miss it. And you just buy it and wait. It doesn't matter what happens when it pulls back 20%. It's a normal thing. Or if you're a disciplined person and you're a patient person, then you want to wait for, let's say here, okay, I will wait for 15% pullback. You want it to make an all-time high. I want it to pull back 15%, then I'm going to get in. But by doing this work and updating your numbers all the time, you just cannot miss this. Specifically with the hottest stock on the market right now, Nvidia. It gave us so many chances for such a long time to get in. There isn't just no excuse to not be in this one. And if you don't own the stock, then you have a lot to learn. That's all. You just have to learn some things and acquire basic skills so you can be in a stock like this. There is nothing complicated about what we're talking about here. Just the basics things. Okay, it's a really strong stock. It makes a high, it pulls back. I measure. I come up with some kind of story and I want to get in this pullback. It's end of the year. It's not going to be so big. I just sit through this time and I wait and boom. Everybody's pushing you up. Everybody who's piling, you just chilling and you're riding this wave. That's where you want to be. You want to be in here. Sometimes you will have to sit through this, but if you know that it's normal, you're psychologically prepared. Nothing is going to shake you out. It's just a normal thing. I am waiting. It's part of the business. I am waiting for this thing to break out. I am going to wait 100 days, 200 days, whatever. I personally am going to wait for as long as it takes. I don't care. Not because I don't care about the time. I care about the time a lot. I don't care in the sense because I don't know. It's not on my schedule. This thing is not going to move on your schedule. This thing is not going to move on anyone's schedule. Well, maybe there are some huge traders who can move markets, but it's not us. It's not me. It's not you. It's probably not anybody you know. So you have to come up with some kind of methodology, and I'm leading to the thing that we found out last time. So our champion here is definitely in semiconductor. These are, again, 7 stocks from the Philadelphia Semiconductor Index, SOX. Last year, number 1, Nvidia. Number 2, AMD, 176%. Broadcom, 117%. And then we have Intel, Taiwan Semiconductor, Qualcomm, and Texas Instrument did nothing. So one of the things that we talked about, first thing that I pointed out, said, hey, look, Intel is in trouble. They have like no margins. Intel made money for the year, but they had the losing quarter. What also shocked me from their annual report was that they are making partnership with dinosaurs like Cisco, AT&T, some old companies that their stocks have been beaten up since 2000. They haven't been where they were. In any case, after putting these numbers up, it was clear that Intel is in huge trouble. So let's go and jump in here and fill in these numbers. Okay. Once we filled this out last time, I really had an awakening call, because if you think about what's going on, there is one company that is really bringing in the money, and that's Nvidia. Earnings per share up 593%. Okay, let's say 6 times, and revenue is double. Now, I just want to finish with Intel. They had such a terrible quarter 4 quarters ago. We are comparing here earnings per share quarter of this year to the same quarter of last year. So when we did that, we saw that Intel's went up 440%. But this is a really important point. So here we have earnings right here. I'm down below, pressing on E on daily. In TradingView, you get this information. So here we are, January 25th, 2024. I go 1, 2, 3, 4 quarters back. I'm here on the left, down below. I click this E and I go up and I see, look, they had a huge miss. They missed by 50%, estimated 20 cents per share, and they reported 10. So this is a Mickey Mouse number, okay? Because they sucked so bad last year and they couldn't suck more this year. They get black, they don't get green. Anyways, if you look at this picture, I think it looks ugly. Not ugly, but ugly. Let's look at AMD. The stock is up 176% last year. Its earnings per share go up 4% and its revenue goes up 4%. The issue that I have here is if the future value of the stock is based on its expected and projected earnings and revenue growth, okay? 176% will go up. In the same period, the company's earnings and revenues just go up by 4. So for me personally, I do not see the fundamentals behind this rally. The same thing for Broadcom. Earnings per share are up 6% and revenues up 4%, and the stock is up 120. And here's Nvidia. Based on these numbers that they're putting up in terms of revenues and earnings per share, compared to how other companies valued, I don't know. This is like $1,000, $5,000 stock. I can't really imagine how these valuations are done. And I'm looking at this thing for more than 25 years. I know I'm not the sharpest tool in the box, but to me, this is a red flag. I mean, I would not give up my Nvidia with numbers like this until something drastically changes. But all these other stocks are suspects. I think we should go and look at the pictures. Okay, here's a long-term picture of Broadcom. I am going back, just picking randomly 4 years ago, this bottom right here that we had after COVID. The stock is up 6 times. And here is that 117% move last year. Clearly, Broadcom is in the mega uptrend. Let's see, the next one is Taiwan Semiconductors. Earnings per share are down 23% and revenues are down 4% this year, yet the stock is up 58%. I do not know this company really closely, but from what I understand, strategically, Taiwan Semiconductor is extremely important company. So if you own it, you may want to do a lot of research, but I would like to point out that this company that is strategically important, that is located in a hotbed geopolitical area right next to China, I think this is a high-risk investment. I do not recommend buying or selling anything. I am just saying that the numbers are pointing in different directions, which means warning, warning, warning. And look at this. You can already see their troubles in their stock price. Here is a stock of a company that is making money, is a leader in its industry, and is supplying materials to the hottest industry, probably in the history of industries, the artificial intelligence. Here's a picture of a company that is making money and whose earnings are up 6-fold from last year. Next, I'm going to show you how you can check and see if looking at charts or pictures, as I like to call them, if it makes sense to you. So let's take Nvidia and Taiwan Semiconductor. Nvidia's earnings per share up 6-fold from last year. Taiwan Semiconductor is minus 23%. In the next slide, I'm going to show you 2 companies, so 2 pictures. One picture will be Nvidia and the other one will be Taiwan Semiconductor. Without looking at the name, I am certain that you'll be able to tell which company is which. So let's go. Here's company number 1 and here's company number 2. One more time. Here's company number 1, sets its high in January of 22 and is down 17% from January of 2022. And the company that is making money is up 170% from the same January 22. And of course, we're looking at Nvidia, and this was Taiwan Semiconductor, TSM. So here you go. And Qualcomm and TXN are just... Sales are going down, earnings are going down, business is going down. Let's look at the pictures and see if Qualcomm and TXN stocks have gone down. This is a really long-term picture of Texas Semiconductors. It's definitely mega uptrend. It looks like, if you look at this huge move up right here, you could make an argument that the stock is consolidating. Yet at this point, it's down 17% from its all-time high. And if we look at Qualcomm, the situation is even worse. Qualcomm was a high flyer when I started trading in 2000. Look at this thing here. Back in February 2000, it makes its high of $100. And then this year, we're looking May of 2023, December 2023, it came down 101, 102. So basically, the stock's price dropped to where it was 20 years ago. Obviously, something is wrong with Qualcomm. It hasn't done anything in the past 20 years. So if you have Qualcomm, you really need to look into your numbers. And even though you may not be losing a lot in Qualcomm, maybe you had it for the past 20, 25 years. Maybe you're one of those lucky people who saw these exponential returns going up into 2000. But right now, the value of your money by staying in those stocks is missing these. You want to go and try and see if you can find these exponential returns just by doing what we're doing. And we are looking for relative strength and relative weakness. We say, hey, look, Nvidia is making money, it's strong. And if we were talking about last year, Qualcomm was stuck in the same spot for 20 years. But again, once I saw the disparity between the stock price appreciation and the absence of the fundamentals behind them, at the end of the last show doing the work, I was really concerned, and actually I was excited. This is really exciting to find something, when the whole industry is going to the moon and there's only one stock that is making all the money. I don't need to give an advice on what to do in a situation like this. It's really clear, right? So here you go. You have very valuable information. Now you have the fundamentals, you have technical. And I'm really enjoying watching the video, the stock that earned it, showing us in pictures what we're looking for. And we're looking to see what people with the knowledge are doing with their money. And what they're doing with their money, we can see in these green, in case of Nvidia bars. I hope you implement this for yourself so you clearly know what's going on with your stocks. I know that if you do this, you will be ahead of 99% of financial advisors in the United States, because financial advisors in the United States do not have time to do this work. And I know that because I spent a long time in the financial advisory industry, and now when I'm left it, I have time to do this stuff, and this stuff is actually exciting, and sharing it is also exciting. So please subscribe to the channel, navigate with care, and I will see you next time.